Hi everyone, it's me again. So today we are going to deal with the 12 sets of paper LCCI third level financial accounting for January year 2019. Again, 100 marks, five questions, five compulsory questions. Let's start. 2 points only. 2 points. Okay, because in this extended trial balance, okay, we have to, you see, prepare the whole thing. Adjustment column, the statement of profit and loss, as well as the statement of financial position. Okay, with everything. Okay, so let's see, 17 marks for the whole thing, and then state two purposes of trade receivables ledger control account. So control accounts. It is a summary. Okay, so provide a summary, okay, for management information. Okay, also with this summary, the control account itself is a control procedure, okay, for you to locate error or to prevent fraud. Okay, these are all the things that we can say for this question. Okay, and then part B, complete the adjustment, statement of profit and loss, and statement of financial position columns of the extended trial balance with the two items here. Okay, so let us finish the adjustment first. Prepayment 1350 to a credit customer, and 1000 for purchases by check having only been recorded in the bank account. Okay, so the bank account is correct. Okay, the bank account entry is done, but then for the payment to credit supplier 1350 and 1000 purchases is not done yet. Okay, so bank account is correct. Then let us go to trade payables. Trade payables ledger control, okay, is in the credit side. So if we want to reduce the amount, we will have to do debiting 1350, and then purchases is in the debit side. Okay, this amount not yet recorded, so 1000 here. Okay, next. Okay, we have other payables and other receivables having not yet been posted to the correct expense account. Okay. By the way, okay, the item just now, we have to put it to the suspense as well, but I don't know if we will have to continue to work on the suspense for the other payables and other receivables part. Okay, so let's see. Other payables, general expenses. Okay, so if it is payables 600, we have to post to the general expenses account by debiting, because crediting is done, debiting is not. Okay, and also other receivables 900. So we find insurance, okay, credit 900. Okay, so this would be the corresponding entry of the other payables and receivables. Okay, but then we still have to work on the suspense entry. So 900 would be here. Okay, here you can see. Later I will take away all the arrows. Okay, and then 600 would go into here. So 2350 plus 600, it will be 2950. 2950. Okay, so the entry for the adjustment is done. Let's see if we can get rid of the suspense. Yes, suspense is gone. 900 and 2950. Yes, gone. 900, 2950. Yes. Okay, and let's balance. Give the total. 3850. 900. Okay, 3850. Okay, so the next part is to update the balance and put it into the corresponding columns of the statement of profit or loss or the statement of financial position. Okay, we have to determine item by item which item goes where. Okay, so the first one, bank 19050, credit, it is statement of financial position. Okay, if it is in the credit side, then it goes back to the credit side. Closing inventory, we have both debit and credit. Okay, that would be because the debit entry goes into the statement of financial position and the credit entry goes into the statement of profit or loss. Depreciation charge, okay, of course, statement of profit or loss. Equity, statement of financial position. Okay, remember, debiting go to debiting, crediting go back to crediting. General expenses, we have an adjustment. Okay, that will give you a total of 56600 addition. Insurance, minus 900, 2700 minus, that would be 1800. Motor vehicle accumulated depreciation, okay, 24. By the way, for these types of multi-columns statement of extended trial balance, I will always do something like this. Okay, that is give a line here, okay, so that you won't accidentally mix up the columns. Okay, so let us continue. Motor vehicle at cost, okay, would be 60,000 here. Opening inventory, go to the statement of profit and loss, 13650. Other payables, other receivables. Purchases, 326000. Revenue, no adjustment. Suspense is gone. Trade payables, 35,000, 1350. It will give a net amount of 33650. And then trade receivables, 65000. Okay, so the last item, okay, being the profit or loss for the year. Okay, we'll have to calculate the total. Okay, usually it is a profit, so I assume that it is a profit first. Okay, if it's not the case, then we will change. Yes, it is a profit. A profit of 32950. Okay, so this is a profit because the credit side of the statement of profit and loss account is greater than the debit side. Okay, so this is a profit, and the profit goes into the credit side of the statement of financial position to add to equity. 32950. If everything goes in the correct direction, then we will be able to balance this statement of financial position. Okay, 152900. Yes. 17 marks for this statement. Okay, if you are given this statement for your exam, then I will be very glad. Okay, because if you know the stuff, okay, the next two columns, the statement of profit and loss, the statement of financial position, are basic things. Okay, but then we have only been working on this type for 2 times. Okay, so you have to get familiar with this. Okay, if not, you are going to lose some marks. Okay, extended trial balance finish. I forgot to put the question details again. Why? Second question. Question 2. For me, it is sundry topics. Okay, let's see. Okay, you are given the trade receivables and allowance for doubtful debt and some non-current assets stuff. Okay, so you see. Okay, financial statement users, allowance for doubtful debt. Okay, and then also some current assets, non-current assets things. Okay, so sundry topics. Okay, so let us start. State 2 stakeholders and their interests. Okay, you have to state and explain. Okay, so for bank, okay, see if they will give a loan. Okay, if they can repay the loan, and its interest, right? Okay, second one, okay, maybe employees. Okay, last time we have also mentioned employees. Okay, they want to know, okay, if their jobs are secured. Okay, if they are able to get a pay rise, something like this. Okay, very simple, 4 marks. Okay, allowance for doubtful debt account for 2 years. Okay, year 2007, year 2008. Okay, so let us look at the numbers. Okay, so we have an opening balance here. Okay, and then the 2 years. Okay, all 10%. Okay, then it should be quite easy because this one would be 5,000, 6,000, and then 5,200. Okay, 1 year there is an increase, and the second year there would be a decrease. Okay, very simple marks for you to gain these 6 marks. Because you don't even have to adjust for the irrecoverable debt. Okay, so allowance for doubtful debt is in the credit side, so everything goes to the credit side if it is an addition, and if it is a subtraction, deduction, then it will go into the debit side. Year 2017, 1st of January, you have an opening balance, 5,000, and then by the end of the year, 31st December, you have to get 1,000 more, so that you have a balance of 6,000. year 2017, 31st December, balance carry down. Okay, and here it is the statement of profit or loss. Okay, so this 6,000 goes down here. Okay, and then in the second year, year 2018, there is a reduction. So reduction go into the opposite side, debiting. Year 2018, 31st of December, again statement of profit or loss. Okay, so it will give you a balance 31st December, okay, of 5,200, okay, which would go into the next year, year 2019, 1st of January, balance brought down again, 5,200. Okay, done. 6 months. Next, calculate the amount of trade receivables to be shown in the statement of financial position at the end of year 2008. Okay, so of course we have this amount, okay, and then minus the allowance, okay, that would give you, okay, wait. Okay, that would give you 46800 for your answer. Okay, 1 mark. Next, okay, it would be related to the non-current asset. Okay, so let us see what is given to us. Toby provided the following information relating to non-current asset. Okay, and we have to work on the non-current asset registered. Motor vehicles, 20% reducing balance method. Computer, 35% straight line, assuming no residual value. Okay, we have adjustment. Okay, full year depreciation is charged in the year of acquisition, none in the year of disposal. Okay, so part C, you're asked to give one other method of depreciation. Okay, we have learned revaluation. Okay, and also another one that is popular. Okay, the third one assigned from straight line and reducing balance method, sum of years digit. Okay, next one, we have to work on the computer. Okay, computer equipment, non-current asset registered. Okay, we have two computers, Carter and Magna. Okay, so let us look at computer first. Computer, 35% straight line. On the 5th of December, year 2018. Okay, is that last year? Which year is it now? Okay, yes, it is year 2018. Okay, Magna was purchased for 800, including a delivery charge of 50. Okay, so 50 should be included as the cost of Magna, because if the vehicle, if the computer is not delivered, we cannot use it. Okay, so carriage in, kind of, okay, is included. So date of acquisition, 5th of December, year 2018. Okay, the cost being 850. Okay, let me see. Including a delivery charge of 50. Okay, so this 800 already includes 50, so we do not need to continue to further increase the value. the cost. Okay, it is included already. Okay, it just tests you on whether you know delivery cost is also count as part of the cost. Okay, so sorry for misunderstanding the question in the first place. Okay, so we know the cost. Okay, and depreciation charge would be 35%, 800. 35% will be 280. Carrying value 520. So Magna is okay. How about Kata? Okay, if you look at this computer Kata, the cost is 1,000, purchased on the 1st of June. Okay, 35% will be 350 for each year. Okay, so you can see in the first 2 years it is 350. Okay, so if you are not careful, then you would also write here like this, 350. Then you will figure that, okay, you will have negative carrying value. Okay, but then this is not making any sense. Okay, we won't have negative non-current asset. Okay, so what you need to do is, okay, yes, every year it is 35%, but then we won't depreciate over its cost. Okay, so if the remaining amount is 300, then we will depreciate by 300, giving a carrying amount of 0 at the end of the 3rd year. Okay, that is, we call this computer kata fully depreciated. Okay, so we finished this part. Okay, this is 3 marks. And then next we have the disposal of motor vehicle. Okay, 20% per annum reducing balance method. On the 15th of November, a motor vehicle was sold for 11,000. This is the proceeds. Okay, this was purchased on the 1st of March year 2016 for 20,000. Okay, so we have to count how many years we have depreciated this asset. Okay, so our year end is 31st December. That is easy. That means our first year of depreciation is for year 2006. Okay, from March till December. Okay, full year depreciation in the year of acquisition, none in the year of disposal. This year, after year 2016, we have year 2017. Okay, and then we sold it during the current year, November, year 2018. So it is not depreciated for the 3rd year. So 2 years depreciation, 20%. Okay, sold for 11,000. Disposal account. 15th of November, right? Okay, so year 2018, 15th of November. Okay, if it's motor vehicle, cost, okay, or simply motor vehicle. Okay, and then allowance for depreciation of motor vehicle. Okay, because we have more than one asset. Okay, so it's important to distinguish. Okay, we have allowance for depreciation for motor vehicles, and we have allowance for depreciation of this computer. Okay, so 2 years depreciation, you can either calculate one by one, okay, or usually I would do something like this. Okay, minus 1 minus 20% square. Okay, for 2 years. Okay, this part is the carrying value after it is depreciated for 2 years. Okay, and then if we use cost minus the carrying value, then we have the accumulated depreciation. Okay, so 20,000 by 2 years, and then okay, we have 7200. Okay, we can also verify. Okay, the first year, okay, we have 4,000. Okay, and the carrying value will be 16,000. 16,000. 16,000, 20% will be 32,000. That will give you 7200. Right, the same. Okay, and then the proceeds is 11,000. Okay, so you are going to make a loss, of course, okay, of 1,800. Okay, so this goes into the statement of profit or loss. Okay, done. 5 marks. Okay, so I guess we have one more question. Explain the effect on the profit or loss on disposal of motor vehicle if Toby had applied straight line method of depreciation at 20% per annum. Okay, so we are, okay, this question is interesting. Okay, we have to think carefully. Okay, now we have applied, now we are applying reducing balance method 20%. Okay, so if it changed to straight line method and the same, okay, what will be the effect on accumulated depreciation, or what will be the effect if we are, if we are more straightforward, what will be the effect on the carrying value or the carrying amount? Okay, so reducing balance method 20%. Okay, what in the second year the amount will be reduced. Okay, so carrying value would be higher, while for straight line method carrying value would be lower. Okay, if that is the case, if we use straight line method, okay, we are selling our asset at the same amount, but then the carrying value is lower. That means our disposal gain or loss, okay, or disposal, let's see, if it is 20%, then it is 40%. Okay, then it is 12,000. Okay, your disposal loss will be lower. Okay, so the chain of explanation can be like this chain of logic. Okay, if we are using reducing balance straight line method instead of reducing balance method, okay, the accumulated depreciation will go up. Okay, this is the first thing, and then the carrying value will go down. Okay, that means we are selling an asset with a lower value, lower carrying value, lower book value. Okay, with the same amount received, we are going to make less disposal loss. Okay, so 2 marks. Okay, but then we have 3 points. Of course, the most important thing is this. Okay, and 1 and 2, you choose either one. Okay, because this would give you the same flow of logic. Okay. Question 3. Question 3, partnership. Okay, let's see. We have Kai Lv and Met were in partnership sharing profit and losses in the ratio of 2 to 2 to 1. Okay, and we are given bank, capital account, current account, inventory, non-current asset, carrying value, trade receivables and payables. Okay, but then this is the year-end balance, 31st December. I guess it is before the share, is it? After the share of profit, okay, after everything. We have change in the partnership on the 1st of January. Kind left the partnership. The remaining partners agreed to share the profit and losses equally. Let me see. Originally, it's Kind, Lv and Met, 2 to 2 to 1. Okay. Now, when only Lv and Met are left, okay, they are going to share equally. Okay, so there is a change. Okay, significant change then. Met introduced additional capital of 50,000 non-current asset valued at 222. So non-current asset, it is 195,750. Now it is 222,000. Okay, there is an increase of 26250. Okay, goodwill valued at 80,000. The partners decided to maintain goodwill in their books. The amount due to Kind was settled by a transfer of 80,000 to a 12% loan account. Okay, repayable in 8 equal installments. Each installment would be paid at the end of each year. The balance was paid by check. Okay, so 8 equal installments of 80,000 paid at the end of each year. That means 1/8 of this amount. Okay, that is 10,000 will be current liability, and then the other 70,000 will be non-current liability. Okay. What? Okay, so this is sent to Met. Hi Met. Okay, Lv sent this to Met. As we are now sharing profit and losses equally, is there any need to maintain a separate capital and current accounts? Okay, these two things seems not directly related. Okay, so this Lv is not really knowing what it is. Okay, so discuss why it is important to a partnership to maintain separate capital and current account. Well, okay, let us deal with this first. Okay, so we have to explain a little bit. Okay, here, okay, if a separate current account and capital account are maintained, okay, it is called a fixed capital system. Okay, so this is important because, okay, this is good and important, I think. Okay, because your capital won't change often. Okay, it keep to the amount of registered capital. Okay, and this is also governed in the partnership agreement, how much each partner is going to contribute. Okay, so it is important to do that. Okay, so that you know, you will not be easily overdrawn. by too much drawings. Okay, so it is important. Okay, and everything relating to subsequent operating results, I should say, goes to the current account. Okay, it is a better way to manage the capital of the partners. Okay, it's not related to how profits are shared. Okay, I can also say not related to how it is shared. Maybe I leave it to the conclusion. Okay, but of course, okay, separation also means extra cost and work. Okay, but overall the conclusion is I support to keep separate capital and current account. Okay, and the combination is not related to how profits are shared. Okay. So in the mark scheme, it also mentioned it is easier for the calculation of interest on capital. Okay, this is also one of the points that you can give. Okay, so let us go back to the calculation. We have to work on the capital account of kind, and then prepare the statement of financials 1st of January of the equity and liabilities part, and then done. Okay, so not much to do. So here, capital account is in the credit side, so it goes here. Okay, everything happens on the 1st of January, so year 2019 here. Uh, 1st of January, we have the balance brought down. Okay, and also we will transfer the balance because he is leaving. Okay, let me move the email to the back. Okay, so capital account of kind 100,000, and then current account 15,000 debit. 100,000 here. Okay, and then current account of kind. Okay, remember you have to write current account dash kind as well. Okay, because there are more than one current account. Okay, 15,000. So what else? You will have revaluation gain. Okay, you will have adjustment for goodwill. Okay, and then you will have the final settlement. Okay, so for the revaluation, you are now sharing profits and losses in the ratio of 2 to 2 to 1, with kind having 2 shares. Okay, the increase is 26250 divided by 5 multiplied by 2, 10500. This is the gain. Okay, and then the goodwill, let me see, goodwill is 80,000. 80,000 divided by 5 multiplied by 2. Okay, it would be 32,000. Okay, and then for the final settlement, part of it will become the loan. How many percent? It is a 12% loan. 12% is a very high interest rate. long, and they are going to borrow it for 8 years. 8 years, okay, for so long. Okay, if I am the partners, okay, if my cash allow, the cash flow of the business allows, I will repay as soon as possible. Okay, from time, okay, this 80,000, and then the rest will be paid by check. Okay, so let's see how much is paid by check. 100,000, 105, and then 32,000, 15,000, 80,000. It will be 47500 finished. Okay, and then the statement of financial position, equity and liability section. Okay, so equity. Okay, for equity, okay, we can show it like this. Okay, we have, let me draw the lines first. Okay, do we have, let me see, yes, we have. Okay, so it would be Lv3 and Matt. Okay, and then total. Okay, so we have the capital and the current account. Okay, so we'll have to do some calculation first. The capital account of Lv and Matt have to be adjusted. There is revaluation gain, and there is also goodwill to be created and written off. Okay, so here I work on the calculation of the capital account first. 100,000 and then 50,000. Okay, and for the revaluation, 26250 divided by 5, it would be 5250 for Matt. Okay, this working can be done in the workings part. Okay, there's space provided for workings. You should do it here, but I don't want to flip the pages. Okay, and then 16,000, 32,000 for the goodwill created, and then the goodwill written off, shared equally, so 40,000 and 40,000. Okay, giving the 200K, 105, 32, oops, again. $102,500, 50,000, 5250, 16,000, 40,000. Okay, and Matt is going to introduce 50,000 as well. Okay, almost forgot. 50,000, 16,000, 40,000. Okay, so it will be 81250. Okay, so 102,500, 81250. Okay, so let us put the amount. 102,500, 81250. Later we calculate the total. Okay, let us go to the current account of the two. 7,900 14350. Okay, just put the two amounts. 7900 or positive 14350. Okay, and the total 102500 plus 183750 22250. Add it to it. Okay, so you see, in this way of showing capital and current account, we have more information. Okay, because there could be another way. Okay, so total equity. Okay, so you can see in this way we can see the total capital. We can also see the total current account balances. Okay, not just from the two, we can see the total capital, total current account, as well as we see the total capital and current account of each partner. Okay. Next, we go to the liabilities part. Okay, first of all, of course, we have the non-current liabilities. Let's see if we have any other non-current liabilities apart from the loan. Go back to the question. Okay. We have non-current asset, but then it is not put there. Okay, bank, it is positive. Oh, now it is a bank overdraft. Let us not forget. Is it? Let us see. Oh, maybe not. We have additional capital from Met. Okay, but then later we pay for 7500. Okay, so still positive. Okay, no bank overdraft. So trade payables 45,000, only that. Okay, and of course with the loan. Okay, non-current asset 12% loan from kind. Okay, it will be 70,000, and then we have current liabilities. Okay, again the 12% loan from kind, the 10K, and then the 45,000 of trade payables. $55,000, 70,000, 55,000, 125,000 206. Okay, so it is 331,000. Okay, total equity and liabilities. Okay, so question 3 done. Okay, before we have the break, let us scan through the remaining 2 questions. Okay, the next question, single entry, or we can also call it sole trader. I will call it single entry. Okay, so Chan sell goods. Okay, do not keep full accounting records. Okay, several items. Okay, and then calculate total depreciation, and then prepare the statement of profit and loss. 15 marks, 15. Wow. And then finish. Okay, great. Nothing else to write about. Okay, and then question 5, we have, of course, the statement of cash flows, opening and closing balance. Again, be careful. You see nil balance in the left hand side. Let us look at the single entry questions. Well, it is not the case in this question. Okay, not consistent. I don't like it. Okay, so we have two balances. Okay, year 2017, year 2018, and then some transactions. Okay, we have been doing it for too many times. Okay, I think you should be quite familiar and quite confident by now. Okay, and some profitability and liquidity stuff for the evaluation question. Okay, I guess this question will have more marks. Okay, so you can see, okay, calculate those stuff, and then investing activities, net increase in cash and cash equivalent, not even, okay, why? Not even a whole statement of financial of cash flows. Okay, that is good. I like it. Okay, so 4 marks for formula, and also 5 marks for the evaluation. Okay, nice. Let's take a break. Okay, let's go on. Question 4. Question 4. Single entry. So Chen sells goods and on cash and credit terms at a markup of 40%, does not keep full accounting record. Okay, this is for the year ended 30th September. Opening and closing balance, 10% bank loan. We have to see when this loan is made and whether we have any loan interest payment accrued. Okay, usually yes. Okay, and then inventory open and closing, machinery carrying value, other receivables, other payables for general expenses and wages. Net proceeds of cash sales, 37200 were banked after paying for the following. Okay, so we have to add the two to find cash purchases. 37200 2900. That will give a total cash sales of this. Okay, let me calculate again to make sure my calculations are correct. Yes. Okay, credit sales given to you, credit purchases given to you, okay, directly. Okay. Closing inventory included damaged goods costing 5,000, which could be repaired at a cost of 1,500 and then sold for 5,750. So cost is 5,000 and our NRV 5,750 minus 1,500, giving you NRV of 4,250. That is an impairment of 750. Okay, so minus 750 here. Okay. House, don't chill on the roof. No. Okay. Chen did not keep any record for goods taken for personal use. Yes, that's what I've been thinking. Because if you have revenue, opening, closing balance and purchases, you can find gross profit already, but you are given the markup, 40% markup. Okay. So you have to calculate the purchases, the goods taken for personal use, and calculate purchases actually. Okay, and then the 10% loan was received on the 1st of April, year 2018. That is half a year. April, May, June, July, August, and September. Half year. So interest accrued for half year, or interest expense for half year. Okay, 10,000, 10%, half year, that would give you 500 for interest. Machinery with a carrying value was sold for 7,130. New machine purchase. Okay. So you have, first of all, 7,135 and 7,290, giving you disposal loss of 155. 155 disposal loss. Okay, loss. Okay, and also, okay, you have to see, okay, let me copy here, the machinery. Okay, 44640, you have purchases of new machine being 37500 and disposal being 7290. So what is the amount of depreciation that would give you the closing balance of this? Okay, so let us calculate 44640 plus this minus this, and then 66636, depreciation being 8214. 8214. No. Okay, next you have general expenses paid. General expenses paid. Okay, you have general expenses, other receivables, prepayment, opening balance, that is you have to add. Credit customer owing 7500 was unable to pay the full amount due to his business closing down. Chen agreed to accept 20% as full payment. So 7,500. Okay, and then 80% will be irrecoverable debt. That is 66,000. Okay. Let me see. Okay. Wages. Okay, add 1380 here. Okay. So that is almost all the things that we need. Okay, see what we are asked to do. Calculate the total depreciation charge. Yes, we have done that already. So 3 marks. Okay, 8214. Okay, I just copy this here. Okay, you go back to the previous page for the workings. Okay, and then prepare the statement of profit or loss. Okay, so direct. Okay. Let us write all the things that we need first. Okay, we have revenue. Okay, and then cost of sales. With the cost of sales, we have opening inventory, add purchases. Okay, but then for the purchases, we have to reduce by the amount of drawings. Okay, and then also closing inventory, and then we have gross profit. Okay, after that we have a few expenses, less expenses. Okay, we have depreciation, we have disposal loss. Okay, we have irrecoverable debt. We also have interest on loan. Okay, don't forget these 4 special items. Okay, and after that we will have wages and general expenses. Okay, these 2 are given in the list. Okay, very obvious. Okay, the first 4 we need to be careful not to forget them. The 6 items. Okay, I guess that's all, but later we check again. Okay, let us focus on the trading part first. Okay, so revenue. We have depreciation A214. Let us put it there first. A214. Okay. My cat is typing. Okay. So revenue. Revenue, we are giving the amount of credit sales 194,150. Okay, here. Oops. Sorry. Here. Okay, and then cash sales. Cash sales here. Okay, plus 43850. So we have 238,000. 238,000. Okay, let us deal with opening and closing inventory. Opening inventory 49600. Closing, okay, closing 750 minus 750. 49600. 49600 and then 36750. Okay, so next, purchases. For purchases, we have credit purchases here 160900, and then also the purchases, cash purchases here plus 3750. Okay, 164,650 here. Okay, so how are we going to find the drawings of goods? Okay, we have to use the 40% markup. Okay, this skill we have already gone into it last paper. Okay, I think it is the last paper, March or April. Okay, if you do not know, you go back and revise. Okay, so if we have 40% markup, it means that 100% is here and then 40% is here. Okay, that means for the revenue it would be 140% of cost of sales. Okay, so 238,000 divided by 1.4. Okay, we will have cost of sales being 170,000. Okay, and gross profit, okay, again 170,000, 40%. Yes, it is correct. Okay, so with the cost of sales, we can find the drawings. Okay, being 7,500. Okay, again, if we are finding this figure backward, make sure you recalculate to make sure your calculations are correct. Yes, it is correct. Okay, so trading account done. Let us go on to the expenses part. Depreciation, finish. Disposal loss, irrecoverable debt, interest, we have already calculated. 155, irrecoverable debt 6,000, and also interest 500. Okay, so let us put it there. Disposal loss 155, irrecoverable debt 6,000, and then 500 on interest. Wages and general expenses. Wages 29,000 plus 1380. Okay, nothing else. 4280. 4280. General expenses. General expenses. We have 34180 plus 300. 34480. Okay, let us scan through the whole thing again to make sure we haven't missed any items. Okay, long inventory, depreciation, this one. Yes, it should be all. Okay, so 34480. Okay, then we calculate total. 53629. Okay, let me calculate again. 53629. Yes. Okay, so profit for the year. One, 4, 3, 7, 1. Done. Okay, this is 15 marks. Okay, so we go to our next question. Okay, statement of cash flows. Okay, let me see again if we have missed any part. Okay, so we have in part A, state one principle of professional ethics. You have plenty to give. Okay, I give this objectivity. Okay, explain one reason why it is necessary for a company to prepare a statement of cash flows. Okay, to show the shareholders, okay, or other financial statement users, okay, the balance or the change in cash and cash equivalent okay, and the reasons of such changes. Okay, under different activities. Okay, and then I may also put into bracket operating activities, investing activities, and financing activities. Okay, so 2 marks. Calculate. This is A and B, and then calculate the cost of land acquired, the cost of equipment acquired. Okay, part C, A, B, 3 marks, 4 marks. Okay, and then net cash used in and from investing activities, net increase in cash and cash equivalent. Okay, ratios, and then this. Okay, this is all the things that we need. Okay, so let us move on then. Okay, again, what do we need? Cost of land acquired, cost of equipment acquired, investing activities, and also cash and cash equivalent. Okay. Whew. So given to us debentures, okay, bank, cash. Is there any short-term investment? Yes. So we can deal with our last question first. Okay, so here there's bank, cash, short-term investment. Okay, remember we have year 2018 on the left-hand side. Okay, so opening balance, cash and cash equivalent, and closing balance, cash and cash equivalent will be, let's see, opening balance 14500, 3750, and 15,000, 33250. How about closing balance? Bank, we have an overdraft of 50,000, 2350, and then nothing else. So we have 47650. Okay, 33250. So the change, okay, the net increase or decrease, we have 47650 negative minus, this is the closing balance, minus opening balance, how much? 33250. 33250. Okay, that means we have a negative change, 80900. Okay, that would be a decrease. Okay, for me, I would prefer, okay, apart from giving a negative sign, write that it is a decrease. Okay, so done for one part. Okay, next we have to see how much we have. Why we are given so many things about dividend and bonus issue, final dividend, but then we don't need financing activity. Okay, anyway. I know. Okay, so let us see. We have equipment and land. Okay, what we need is, yes, cost of land acquired, cost of equipment acquired. Okay, so we go to, we have revaluation as well, so we can find land. Let us see what things are related to the land. Equipment, depreciation charge, land is not depreciated. Okay, so we can find it. Okay, so opening balance 150,000, and then we have revaluation, okay, 50,000 increase. Okay, that means the land is increased by 50,000 because of revaluation. How about purchase? Okay, and then we will find the closing balance. Okay, 30,000. Okay, that will be 100,000 for purchases. Okay, so we have found it. 100,000 purchases. Okay, you have to show the workings, but I've already done so, so you copy what it is. Okay, cost of equipment acquired. Okay, what is given to you for the equipment? Equipment costing 50 with carrying value 30 was sold at a loss. Okay, so we have here 50,000. Okay, carrying value 30,000. Okay, it means the accumulated depreciation will be 20, and then it is sold at a loss of 5400 negative. That means you receive this amount. Let me calculate. 24600 minus 30,000, 5400. Yes. Okay, so let us go back to the equipment. Okay, equipment charge given to you 115. So equipment 60 plus purchases, we don't know how much, minus disposal 30,000, disposal. Okay, minus depreciation 115,000 is equal to 655,000. Okay, 600 minus 30 minus 115. Okay, it will be 200,000 purchases. Okay, so here 200. Okay, next part, we have to give the net cash used in and from investing activities. We have two. Okay, one is purchases of land and equipment. Okay, land being 100,000, equipment being 200,000, and then we have disposal. Okay, disposal being 5400. No, the disposal, the proceeds, okay, being 24600. 24600. Let us read on to see if we have anything else. Okay, so we have dividend, no. Bonus issue, no. Final dividend, no. Okay, and then we have dividend received of 5,000. So dividend received is from investment. Okay, and maybe a short-term investment pay you 5,000 dividend. That's why it also goes into here. Okay, so 5,000. Okay, that would give you negative 300,000. 24600 plus 5,000. That would give you 270,400 negative. Okay, net cash used in investing activities. Okay, I am quite concerned about the information given to us, but I don't think we'll do it here. Okay, but if I am working on the exam, okay, the real exam, I might do one thing. Because you see, you are given dividend, bonus issue. Okay, that would be financing activity. You are also given an issue of shares here. You can see, but then it is a bonus issue, so it is okay. Okay, here bonus issue, and then you have dividend, and then you have issue debentures during the year. So financing activities all the way. And if you are given net cash from operating activities, okay, let me use another color, green maybe. Okay, you are given net cash from operating activities. You are given the net increase or decrease here. We have calculated and you are given information about financing activities. Okay, how about you can work out the whole thing, but then you are not asked to do, but then you have given the net cash used in investing activities. I might use the remaining information to help me see if it is a full statement of cash flows, okay, whether it can be prepared, okay, as a checking. Okay, anyway, okay, sometimes level 3 questions give you more information than needed to confuse you. Okay, so next part, okay, we will have the formula. Okay, state the formula. Profit for the year as a percentage of revenue. So it is profit for the year over revenue, right? And then 100%. Okay, and then return on capital employed. Okay, this one, okay, capital employed, it would be profit before interest and tax over total capital employed, that is equity and liabilities. Okay, so I can tell you here in the mark scheme, it only gives you profit for the year over total, not even total, okay, capital employed. Okay, just that. I think it is not a good answer, okay, but then I just give you what it is given in the mark scheme. Okay, so here this longer version is what I prefer. Okay, so another one, current ratio, you have current asset over current liabilities. Okay, quick ratio, current asset excluding inventory over current liabilities. Okay, so these ratios are very basic. You should have no problem. Okay, next one, for part D, you have to evaluate, okay, the profitability of business A in comparison to business B. Okay, let us read here. Profitability, ROCE, and profit as a percentage of revenue, you can see, okay, this is better, but then for ROCE, business A is better. Liquidity, A is a little bit better, okay, and then quick ratio, B is a little bit better. Okay, so this is very similar to our last question. Okay, so I'm not going to write down, I just discuss with you. Okay, one information is not given to you, that is it related? Is it related? Let me see. We have to evaluate. It is not said it is related to our previous question. I mean, previous parts, part A to C. Okay, anyway. Okay, if we have to say which company is better, which business is better, of course we look at the ratios, okay, one by one. For profit for the year as a percentage of revenue, that is how good it is, how to say, we have generated revenue, okay, with our cost of sales and with the support of our expenses, of course. Okay, in this case, business B is doing better, okay, comparatively speaking, okay, when compared to business A. Of course, a higher profit percentage, okay, giving you, you can sell your products at a higher price, and also keep your expenses low. Okay, this is good. Okay, but then when we look at ROCE, it gives you the overall profitability in relation to the finance you have. Okay, so for business A, yes, okay, it's not gaining too much profit when compared to revenue, but then if you compare to the amount of investment, then it is better. Okay, you are having a 15% return on your investment, on your capital. Okay, so it depends on which side, okay, which aspect you are using. Okay, so both can be, but then from the investor's perspective, of course, business A is better. Okay, and then for liquidity, business A has a better current ratio, but business B have a better quick ratio. For me, I would prefer to have business B as better, because for the immediate liability, I mean, for liabilities you have to pay, okay, the asset test ratio is a more important ratio. Okay, you have a better current ratio for business A, but then it is only because you keep a lot more inventory than business B. Okay, inventory takes time to turn into cash, and if you cannot do that and you have quick ratio of 0.9, then it is not a good sign. Okay, you have a risk. Okay, for business B, there is lower of a risk. Okay, but then still, okay, if you are not keeping enough inventory, it would still make you lose some potential sales. Okay, if you have some order and you cannot fulfill, you lose that. Okay, so that's all for today for this paper. And tomorrow is a Sunday, so I would take a rest, and I think we will continue on Monday. Okay, so we will move on to year 2018 papers. We have 8 sets of papers in year 2018. Okay, so please download it in advance from the official Pearson LCCI website. Okay, and see you.